Hello everyone, and the Reserve Bank of Australia today left rates on hold. I thought they'd go 25 points, but they left rates on hold. They're a bit of a stop-start central bank of late, all over the shop. In fact, I posted something on LinkedIn this morning saying exactly that, expecting 25, but anything could happen because they're all over the shop, and they most certainly are. On the positive side of things, it looks like the governor might have got a public relations firm in to help him write his accompanying statement, because it was a little lengthy and it was all about good feelings, good intentions, but it did end with the note that rates could well rise again. And of course, we've got quarterly CPI inflation coming up soon, and that could easily prompt the RBA to go again at the next meeting. My view, they should stay where they are and stop doing harm. They like to think they're doing both harm and long-term good. Any further rate hikes only do harm. They do nothing to defeat an inflation animal, which by its nature in this contemporary setting will be self-defeating. In other words, inflation will moderate at current levels and eventually subside all of its own with interest rates of 4.1%, and they do not need to go any higher, because all they do then, as they are not really solving the inflation problem, they will, rate hikes will be claimed to have solved the inflation problem. But given the nature of the inflation animal, remember the 60s, 80s playbook that's being used now was built for an inflation that came about from overheating economies. Our economy is not overheating, it's flat. Manufacturing in Australia is probably already in recession. The building industry is probably headed that way as well. So it's, the inflation is born of the higher risks and therefore the higher prices and wider profit margins generated during the pandemic, and then added to in response to the Ukraine conflict. And in more recent months, it's about that spread of goods pricing going through into services, and it's about the response of wage demands creating a wages price spiral effect to the upside. The idea that you reduce corporate profit margins, or you stop their pricing according to desiring wider profit margins by raising interest rates, is a nonsense, because it's probably only going to prompt ever wider profit margins, which means ever higher prices. So any further rate hikes by the RBA at this point in time will generate inflation, not defeat inflation. And I think that's a very important distinction, and it's a nuance that our Reserve Bank of Australia seems to have no ability to ponder or assimilate or consider. And I think the upcoming decision by the Treasurer, Chalmers, in about a month's time will see an end to the reign of Governor Lowe, and hopefully we will get a more nuanced approach to monetary policy moving forward. In terms of market impact, that relief rally in equities may not be sustained, because people are going to realize the only reason rates are stopping going up is because even the RBA thinks we're going to go into recession, so we better not allow that to happen. With regard to the Australian dollar, I think it is justified that it has fallen immediately in response to this development, and there are prospects, I think, of further declines as the market considers that global economy is slowing, and the Australian dollar will not be getting as much support from interest rates as perhaps some people have been hoping. Thanks very much. Clifford Bennett, Chief Economist, ACY Securities.